All right, guys. So some of you guys asked me, how do you execute and how do you exit, or when do you exit, when do you execute? So I'm gonna go ahead and do this little mini course here on how to execute, when to execute, what to look for, and when to exit, how to trail, how to stop, how to put your stop loss. All right. So this should cover things pretty well, and hopefully this can get you guys started on your own. And if you guys are trading on your own sometimes, um, all right, so usually what I do, obviously I do the charting, right? First I start charting always before any trade. As you can see when you guys join my lives, I always start out by charting, right? I chart from the higher time frames up. Or as you can see, this is how I do it right here. Literally 240, 195, 120, 60, 30, 15, 10. I don't do the 5 minute usually because that's what I trade on. So I look at that chart on my trading. Um, so let's go get right to it here to what I look for when I execute, right? So pretty choppy today, right? But there was big moves. These were the moves right here. These were the moves that I was looking for right here. Yesterday's analysis, um, my analysis was basically to go short right here underneath this line, around the 60 area. That's why I circled it right here to keep it on watch, right? So whenever it comes to this area, and if it does reject like this, then I look for the downside, down to the bottom targets. I had a demand somewhere down here before. I think it was about 76. Yeah, 76 was my demand before, but I deleted it because obviously it went right through it, right? Um, so I did have a demand right here, right at 76. So that was my target basically, 70 from 60.62 down to 76, and that's right there is 60 ticks. That's 60% gains, right? Whatever you want to put in, if you put in one contract $1,000, that's gonna be $600 return right there. Well, one contract, this move alone, right? There was a supply I had here and a demand I had here. So, so I believe it was this move, this area here. So this is about 8:30. We're gonna look at 8:30 right here to pull back the data. So this right here is 849, 850, 850. We're looking at 850 right at this candle. So pretty much right at this candle right here. This is where it all happened, right? Okay. So knowing that this is my level for my analysis,
Bottom.
yesterday I said 76.60, right? 76.60 was my area where I'm gonna look for rejection. So if price comes up to here, right? I'm just gonna watch it. I'm not gonna just enter right here and just execute shorts. That's not what I'm gonna do. Okay, I'm gonna watch it and see what it does. If it comes up to it, it's still coming through it. I'm not gonna enter. What I like to do is I like to wait for it to come up, right, and then show a drop from there. And then as it's coming down back underneath the level, then I start looking. Okay, well, how's the rejection looking, right? How's the rejection looking? That's when I start my position. Okay, and usually what I do is right at that area here, I start looking at the 1 minute. The 1 minute, as you can see right here, look how the 1 minute looks right there. Okay, look how it lines up right there to that area, right? The 1 minute as it's coming up, see how price looks like when it's coming up, looks strong, right? As it's coming up, let's look at the volume. It's coming up, and then right around this area.
Connection lost.
All right, so as price is going up on the 1 minute, right? We gotta watch it. We gotta watch the volume, right? Right here, you see the volume. So far, every candle is consistent. So I'm not gonna do anything just yet. Right here, you start seeing a rejection right here. You see, this is inverted hammer. This is what we try to look for when you're trying to look for reversals. Okay, first sign of reversals is usually right here, the inverted hammer or a hammer. It will look something like this as a hammer right here. This is a hammer right here, and then this is inverted hammer, as you can see, upside down hammer, right? So that's the first sign of rejection. Okay, at the time, obviously, I had a level here too. I had a supply here, but right now this is no longer there. But at the time, when you see this right here, this is the first sign of a reversal right here, right? Once you see that, and then price, and then what you want to do is you want to wait for the next candle. You want to wait for the next. Don't enter just because this candle right here shows that. Okay, that's the first sign. This is the 1 minute also, so you got to keep in mind this is the 1 minute. Things could change very quickly for the 1 minute. So I look for this. This is the first sign of the reversal coming in, right? And my analysis is we're looking for a rejection at this level, the 76.62 level. So once price came down, you see, that's when I would enter. This is when I would look for the entry. I'll start my position, right? And then if price come down again on the next candle over here, making even lower, you see how it's lower than the previous candle? That's when I'll probably go full position. Or if price comes up again right here, right? And then if it happens to reject again, I'll go my full position right there. That's how I add. I always start a position, and if price continues in my direction, I add my full position. Or if price comes back up and then rejects again, not make if it, but if it makes it like another higher here, I'm out. That this trade is no longer good. It broke its position. It broke its formation, broke its trend. So we want it once it rejects like this, it needs the next candle, whatever it may be, it could go up, it could go down, but as long as it does not break this level. If it breaks this level, this is no longer valid. Okay? And what validates this trade even more would be, let's say if it comes down while it's coming down here, right? You want to see volume, continuation volume, okay? So volume, continuation volume. Let's take a look right here. So this is the first sign of reversal. Second candle over here. Take a look at the second candle down here. Look at the volume. You see, no drop. At least it's consistent. You want to see it at least consistent. You want to see it moving up though. Volume needs to be moving up, even better. But you see, volume is now increasing, right? You see it here on the 1 minute. You're gonna see this, but on the thing about it on the 2 minute, 5 minute. I was using 2 minute before. It's hard to see. But on the 5 minute, it's a little hard to see. Look, if you look at the 5 minute here, let's see. We have a spike. See, we have a little spike right here. See the volume? Look at the volume right here, right? It's increasing. But the thing is, with 5 minute, it's harder to see it because it takes longer to develop. The candle takes longer to develop. The volume bar takes longer to develop also. But right here, you can see on the 1 minute more clear. So for me personally, I always tell people not to look at the 1 minute. Don't even have it up, right? But I started using the 1 minute again because how I use it. I don't use it as my main screen where I execute. I use it as a side screen to look at like the trend, the micro trend, and the volume, how it's developing to the 5 minute. So I don't use it to trade it. Um, so so you see, look, as the volumes, as the red candles drop, you see the volume slowly increasing, right? Increase higher, 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 and then now it's above this average line. It's above this average line. Now it's just consistently, see that? It's going, 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 right? So my next target at that point, you should already know where your target is. Your target is down here. This is my target, 76. That's my first target. I had lower targets than that, but obviously 76 is the main level. So we're gonna obviously see how price reacts when it gets there. But I'll be trimming most of my position already by then, or even at least half my position, right? And that right there is 60 ticks. You see, that's a huge move for CL. 60 ticks in a quick move, in a quick what, in a span of what is this? 10 minutes. 10 minutes, you get 60% gains. That's huge. Okay. So that's the first sign. That's how I use volume. That's how I use the I look for candle formation. So something that you guys have to understand is how to read candles also. Over time, you guys are gonna start seeing the same thing over and over happen. Say literally, it's literally like it becomes like second nature to you. You see this candle over here, you're gonna be like, oh, hammer, inverted hammer. When you're looking for rejections, you're gonna wait for these kind of candles, right? When you're looking for reversal, take a look. Almost the same thing, right? Look, you're getting the same thing, but now it is a hammer instead of a upside down hammer. You see, and look what it did, reverse, right? So, so you see now, look. So then we're gonna come down here, right? We're gonna watch this area, and here's how you hold also. Um, so the way you would hold is as it's coming down, as price is coming down, right? Price is coming down. This is the first time right here you see buyer step in, right? Buyer step in. The volume is just as strong, so it means buyers are just as strong. But let's take a look at the next candle. Look at the next candle. Okay, we just keep watching. This is a doji, so it doesn't really count. Even amount of buyers and sellers. And then as price comes down, what happens? Is it strong? Look, price comes down. Look, this seller over here, price came down. But look at the volume. It kind of dipped a little bit, right? And then look at the next candle. See, because it dipped, buyers came in and stepped in a little bit, right? Buyers stepped in a little bit. But you look at the buyers candle now. Is buyers even strong? They're not. See? You see the buyers below average. Below average. So what happens after that? Sellers continue coming in. And now look, sellers step in and look at the volume. It's now increasing again. You see? So that's how you would hold the trade. You can see if buyers are actually strong. If buyers are strong, I'll exit the trade. If buyers are weak, then I'll stay in the trade. Right? So as price comes down, look, this is where you want to look for an exit, right? So because you're in that trade, you're managing it now. And and we know that this is an area of support. So when we get to this area, we have to look for signs of reversals. When does this trade invalidate? When does this trade when will buyers step in, right? So once we come down here and we see a wick going up, we have to watch for it, okay? With volume stepping up a little bit right here, we know that as price comes down, right, during that time, that volume is probably half this size. And then buyers came in. When buyers came in, you see a wick come up, and then the volume suddenly shoots up. That's how you know this volume belongs to buyers or sellers, right? But then knowing that, as price goes up, wicks, you see a bottom wick, that means buyers are stepping in. When buyers step in, you gotta watch the volume. Okay, if the volume becomes higher, that means there's a lot of buyers. So you kind of have to keep an eye on how where is the volume bar at the time the volume is developing, right? Because if it's only a little tiny bit, let's just say the volume is just tiny, right? The volume is just tiny, and then out of nowhere, there's a huge amount of volume that picks up, right? You gotta see who does it belong to? Does it belong to the buyers or does it belong to the sellers? But if there's a giant wick coming up here, that's all buyers volume that's stepping in, right? So at the time right here, you can see here it comes down. Sellers are obviously getting held up by buyers right here. Buyers are pushing it up, and then look at the next candle. Boom, buyers stepped in, right? Next candle. Look at how green this bar is. A lot of body. It's almost a full body candle, right? And then look, sellers try to step in. Sellers try to step in, try to take control. They couldn't. You see, volume's very small, right? That's how you know right there. That's an exit. Sellers are no longer in control. It's now a pivot, right? It's no longer now you. And also, look, this candle already surpassed. The moment the candle surpassed this right here, that's already a sign of reversal. That's the first sign of reversal right there, right? When the candle can beat that previous candle. Um, so that's how you exit a trade that you're in. That's what you look for. Okay. And always try to see where the trade is going before you enter. A lot of traders, new traders especially, they enter a trade and they don't know where they're taking it. They don't know where the exit is. They don't know where their target is. So, if once you have that defined, you're gonna have a better trading plan. So it kind of comes down to, and look, see, so after that move, right, we came up, and look what happened again. We're back at the same area, and guess what? Had we been at this time, I wasn't even around anymore. I already ended the live session. I'm done trading by that time. But look, the same exact trade underneath. Look how it developed. You see, there's another one of those candles, right? And then let's take a look at where that candle is on the 1 minute. Let's take a look at how it looks on the 1 minute, right here. So this one doesn't look that great on the 1 minute. This drop was a little bit more abrupt. It looks like, yeah, yeah. You kind of have it more so on this candle right here. Yeah, but anyways, back to what it was. My analysis, same analysis, right? Underneath this line here, and look what happened. Same exact thing. Although I think it was news that we had. It was some war news, I believe, right? Someone showed it to me. It was war news during that time. But once we have this movement, right? As it's moving down, you see it's making lower lows, lower lows. Look at the volume though. The volume spiked dramatically right here, so it's kind of hard to tell. But see, it came out of nowhere. The volume came out of nowhere. So we have to stretch this out, kind of make it normal. Okay, let's look at the volume here, see what it looks like. Yeah, see, right here, this one's a little harder to read because it's obviously news. Came out of nowhere and then we spike. But if you were to play from levels alone, right? Levels alone, you come down here, look what it does. The moment it does, it drops, right? Once it drops, gets support here, comes back up, rejects it, then you would enter right here, right? You'd enter here, take the same TP, right? And then obviously you would take it to the next level right here. Let's just say right here, you see some type of support here, comes up. All it did was break down, right? Retest. It pretty much did this. It broke down, retest, and then as it's coming down here, this is when I would enter or add, right? That's where I would enter add. Once it starts coming down again, once it pushes away, I don't ever add just because it comes up, just because it's pulling back up. Okay, that's not how I add. That would be just you're just assuming that it's not gonna bounce. It's not gonna just shoot right through. You know, you're just assuming that it's gonna hit this level and go your way. So So what I do is you'll hear me on the lives all the time. This is I walk you guys through how I add. I always wait for it to shoot through, come back up, and then as it's coming down again, and I see volume picking up. If I see volume behind that move and the candle's not even closed yet, let's say the time. That's the reason why I have a bar timer. Okay, like if the candle's not closed yet, it's only like halfway, and the volume is already a good amount. I already know that volume is gonna keep on increasing for the next 30 seconds or the next duration of whatever the candle is. Right? That's why I add. I add like right here. See, I add right here, and then volume will push it through. Volume will push it through, right? We'll go to the next target, see, and then we'll TP here, right? And then look, 74.92 was also a level, right? So once we get, and then after that, we just keep holding. We keep holding, right? We keep holding. Now, let's say if price does go back up, right? What happens? What do we do? How do we manage this, right? Do we keep holding? So what happens? We usually do is we obviously are going to move our stop loss to the next resistance or support, right? We'll move our stop loss down to here, this area, and now if price comes back up here, we wait for the 5 minute candle close. If the 5 minute candle close above this level, we close the trade. We close the trade, and if it happens to wick it, so be it. That means we get stopped out in profit at least. But sometimes price will go like this. It'll just shoot up, down, right? And go through it, and then when it closes right here, perfectly underneath your level. So if it closes perfectly underneath your level, you hold. That's it. You just keep holding, right? And then if price closes above, you exit. If price stays below, you keep it down. You hold the trade, and then you hold the trade to the next target. Here it is. Here it is. You trim one more here. You see, and then same thing now. And then what happens, right? You want this to close underneath, right? Once it closes underneath, it cannot close above. That's the general idea you want. Whenever price close above below your resistance or support, you do not want it to close on the opposite end anymore. Because if it closes on the opposite end on the 5 minute, then that trade you can go ahead and exit because now it's not strong. The trend that is going in is no longer strong. So whenever it closes above a level, it tends to go to the previous level. Okay, if it closes here, it's gonna go back to here, the previous resistance or support. If it closes here, if it closes, let's say underneath this, right? Where it's gonna go next? It's gonna try. It needs to stay right here, right, to retest. But the next level is gonna go is down here, and then from here, if it bounces and it cannot close below, it's gonna go here, right? You see, look, this is how it's kind of doing right now as we speak. You see, so pretty much see right here. Look. Let's just say right here. This is actually today's market right now. So you see how it closed above? It closed above. It should not come back below. Okay, watch. Right? See, it should not come back below. You see how price goes up, but you see it stays right here. It's right there. You see. Now, if it stays above here, where's it gonna go? Up to here, right? And that's what it did. You see? See, now it's in this zone. This zone is now resistance. And then now, look, once it closes below, where's it gonna go? Down here, right? Where does it go? Right there. You see? And then now, if it closes below here, where does it go? Down to the next level, right? There you go. You see? See, it's like magic. See? And then look, once it's below here, it goes to the next level, right? And then let's see. So now it's back above. Now it's back above this level. Where's it gonna go? Up back to here, right? Probably. Where are we at? I think this is right now. Yeah, this is right now. Yeah, we're stuck in this zone right now. There's no volume here, that's why. Yeah, so right now there's no volume, so it's not going anywhere. It's just stuck in a range. But you guys see the point, right? It goes from level to level, and that's how you should trade. Always trade level to level. Once it's at a level, you trade the next level. Now, the problem with a lot of traders is they don't know. They tend to trade in low quality zones, low quality zones. Okay, anytime there's a zone that is not quality, you don't trade inside a zone. This zone is too small to trade. You see, you use it as a resistance or support. You trade outside the zones. Unless the zone is this big, right here, you can trade within that zone, right? Look at the space into it. There's a 40 tick move in between the zones, so you can trade in that zone if you want. See, this zone, 40 tick. You can trade in here if you want. But that's scalping. You get scalping. The problem with zones is that they're meant to be there for rejection. You want to use it as a rejection or support or a bounce. You don't want to really use it as a move. It's not gonna move through it the way it does like this. See, big candle. You see, like in these areas, look at it. It moves like this. It actually has a directional move. You see, it has a directional move. But in the zones itself, you see it right here. There's no move. It just goes sideways. That's the reason why those are low quality trades. And let's see. Okay, so you guys have any questions? Any questions before I move on to the execute checklist here? This checklist right here. Let me give it to you guys here. I'm gonna send it in here so you guys can all save it. Save that. Put that on there on your screen or something when you guys are trading, so you guys can actually have a checklist. Go through that when you're trading. That's gonna help you. Um, it's gonna help you kind of be a reminder. Sometimes you need a reminder of what to look for. So let's see if you have any questions now, and then I'll hop onto the checklist. I'll go down the checklist here that I can answer. Delete all this so it's not dirty on my screen. And then I'll move on to I guess, trend line, since this is one of the trend line trades right here that I'm in. How do you know when the market is trending or ranging? Okay. So this is the first question right here, right? The first checklist. So how do you know? So I always trade. I have the 5 minute, like I said, up mainly. I have the 1 minute on a smaller time frame, and usually that 1 minute, I only see like a part of it. Like pretty much, look, this is all I see in the 1 minute, like kind of like this, very small, because all I need to see is that current, kind of like the last like 10 candles and the volume. That's all I see. That's all I care to see on the 1 minute. Um, so How do you know? Look, this right here is a. What do you see? Right. This is obviously a ranging rare, right? So you need to identify first thing, is the market trending or ranging, right? So because it's ranging here, we know that this is the range right here. This is the range, right? We start seeing it when it develops about three times. You know, three times. Anything three is a pattern, okay? So trend lines, if it hits three times, it's a pattern. Look, the bottom here, three times, it's a pattern, right? Anytime anything hits three times, it's considered a pattern. So we know that this is now the range, right? But at the time, I think the market was kind of fresh, like right around here, 7:30. It just started like right around this area, right? It just started around right around this area, and all I know is that I had this level for the overnight session. This is the level I had. So at the time, I did not know that it's ranging just yet. I knew that it's kind of choppy though. In the morning when I first saw it, it was a little bit choppy already. So but the easiest way to see if it's ranging or trending is you gotta zoom out, right? Look, let me just show you. Like, let's just say zoom out to the hourly. Okay, we're gonna zoom out to the hourly. Look, this is what it was today, right? It's pretty much overall in a range, but it's in a big range. You see? Look on the 15 minutes now. Look at the 15 minutes, how it looks. This is how you know we're here if it's ranging or choppy. Just look at it. Just see how what it's okay that it's in range too, but you just need to define how big the range is, right? Look, this is a huge range, so you can actually trade it. It's actually trending on a smaller time frame. But just know that when it hits this level down here, it's not gonna break. You know, just know that. Like, you know, just know that it's gonna have a hard time breaking these highs and these lows. So when you're in a trade, just know to trim around that area or TP around that area. I am a holder most of the time, so I like to hold the trade past that point. You know, I always try to break through or have some follow through. So I always leave like a runner. But lately the runners haven't been working out just because it's not it just reverses when it hits the level. But I'm okay with that because that's my style. You know, I always leave a runner. Um, and then was this entry in my trading plan? Is this an impulsive decision? So this is something that's very important. Okay, so you see how I told you guys I had a trading plan, right? From the analysis from yesterday night. Yesterday night, this was my trading plans. So you know what? Let's go to NQ since we did NQ. Uh, let's see, where is it? Since NQ was a trade that we took today, so let's do that. What the hell was that? What the hell was that? Oh shit, messed it up. Okay, CL. Shit. Okay, let me just correct that real quick. No link. Okay, what the hell just happened? Okay, right here, NQ. Okay, sure. Okay. All right. So the reason why I'm going to NQ because that's the trade we actually took today. All right, it was right here. So in my analysis from last night, I said rejection around 370, optimal trade entry around 370, right here. Early entry that we can look for is around here, but optimal short entry is here, 370. So at the time when it was in the morning, right? Price was like this. This is how price looked like. So this is actually a good example. So this is what the price looked like the whole morning, right? Right here. So at the time, it looked like 350, 360 was around this area right here. 350, 360 was resistance, right? This area looked like resistance because look, it's hit it. One, two, three. So technically that's now trend. We would mark that. We would mark that, right? Look, coming down here, look, it keeps holding down below. But I never took a short. I never took a short right there, even though that looked like resistance the whole time. No matter what it did, I never took a short from here, right? But what I did do is I did try to take a short for right here below 335, I think at one point, but I got stopped at break even. Because that's my other area where if it's below that area, then I'll look for short. It's either here I'll look for short or up at 370. 350 was not in my plan to look for shorts, so I never took a short at 350. Even though it looked like the whole day that was the plan, that was the resistance. But price. So what I did was I waited, right, and then finally Actually, right around this area, I look for longs right around this area here. I actually looked for longs somewhere down here, but I got stopped out like really quickly with my bracket. I don't know why. My bracket stopped me out break even really fast. It got messed up. But I did look for longs, and it went like this, and then went down real quick, and then it wicked me out, stopped me out, and then it went up. Right, so that would have been a nice play too, but I got stopped out fairly quickly, instantly almost. Um, so whatever, I missed that trade. Right, I just waited for it now, and what I did was I eventually waited for price to actually hit 370. Look, and it actually hit 370, right? And as price was, let me change this down to the NQ here so we can see what happened during that time during the 1 minute. What time was that? Right here, around 8:30. Where's this? 370. Okay, so here we go. So this is what it looked like on the 1 minute. You're gonna see a lot more clearer with NQ. Okay. So at the time, right, price hit this area. Price hit this area. Let's look at the volume. We're on the 5 minute, right? So this is how you know it's gonna bounce also. You can see right here. This is what we're looking for, right? For bounces. Once it bounced, look, volume was dipping. You see that? Look, as price was coming down, right? Take a look at right there, these candles. You see, this candle was coming down, right? It came down right here, inverted hammer almost right here, and look, but the volume had a dip, right? That shows right there, sellers are not in control at all. But if the thing is, if you were to only look at the candle itself, you would if you look at the candles, I even said this on the live actually when we were reading the price action. Looking at this candle right here, right? I mentioned that there's no volume to this push down right here. Even though you look at it, price and candle formation looks like it's gonna break down, but volume does not show strength. See, volume. Look, of all the candles, this one had a dip. You see, and look what happened the next candle. Sellers try to push it down, and look at the big wick. This big wick is all buyers right here. See, buyers came in. Buyers stepped in, so it pushed it up. So now what we look for coming into 370, where the area I was planning on rejecting, right, is how strong is the volume, right? So here's the volume coming into it. 5 minutes. Let's look on the 1 minute now. So the next one, sellers came in. Sellers stepped in right here, and look, this is the where buyers try to push it back up, but sellers came in to push it down. Right? And then you look at the volume, consistent volume right now. The volume is like picking up a little bit right here, right? Look at the volume, see, almost the same. It's picking up now. If you see a volume dip like this, that means it's not strong. But because it's right here, just as much as the previous bar, it means volume is at least consistent. Sellers are there. They're not backing off yet. And then as now let's go down to the right around here. 1 minute, right? See what happens on the 1 minute time frame now. Looking at the 1 minute, see, same kind of style of candle, right? You go up there and you get a wick. That's the first sign of reversal that you want to see. Always look for candles like this before you start entering a reversal or trying to catch the top or the bottom. Okay, catching the top or the bottom, you have to know how to do it. You have to see a pivot. You have to see some type of reverse signal. A sign of reversal. And then here it is where this is where I started to look for entry. Right, is as this candle came out, I didn't enter right away. I did not enter right away. Okay, I waited to watch. Okay, look at the next candle. Look at this next green candle over here. Let me make it bigger a little bit. So the next green candle here, you see the volume? Look, buyers try to push up, but what happened to the volume? Look, weakness. You see that dip in the volume? Weakness right there. There's no volume to the buyers. And look what happened to the next candle. I think, and so the next candle came up, and this is where I entered right here. I entered this area. Look, volume. This is my first entry. So my entry was at 65. That was my first execution of entry. I entered one right there, right? Then we got a dip down, we got a drop, and then after that, so right after I entered, where's my stop loss? Up here. But the thing is, I knew that there was I saw liquidity on Bookmap at the time at 375. So what I did was I put my stop loss at 380. So I was willing to lose about 80 ticks on this trade. Because, this is my plan. I'm willing to lose the 80 ticks. I know my defined risk. I accept it because my target was all the way down here at the time. So my target was like far down. So that's why my risk was okay on this trade. You see, look on the 5 minute. If you look at it, it's pretty defined. Um, oh crap, just move that. Anyways, so yeah, so this was the supply, the red zone here, and I was gonna take it down to here, the green zone. You see, that was my risk to reward. Look, it's like what 1, 2, I don't even know, like 8. Risking 80 ticks. Risking 80 ticks. I guess eventually I did get like 400 ticks out of this trade. So at the time, this is the 1 minute, right? Price shot down. That confirms our trade, right? Price came up. You see, price came up to the same area. Look what it did again. Reject. As long as it doesn't make a higher high, we are okay. This trade is intact and it looks good. That's your first sign. Is that when price comes back up, it cannot reclaim that high, and then it moves down. So then once it dropped down below here, I added. This is where I added right here. When I broke this structure, I added more because now price is going in my favor, right? And then I think I took some profit off of here. Yeah, I took some profit off of here. The price came back up again to 350 right at the time. And then I said if price rejects 350, then I'm gonna add more, and I'm gonna scalp it. So I'm gonna scalp it, and then when it came down here, I took it right there. I scalped that. I scalped that extra contrast I added. So I added some right here. Came down here. I took some off again. You know. So I was like making trades within the trade. My game plan was to hold my runner down, but because I know that it's bouncing, and if this is a breakdown right here, and this is just a retest, if this rejects, I'm just gonna add right there and take another scalp right here. And so that right there was a quick scalp. That's what, like 60, 70, 80 ticks right there, depending on where my entry was, if it's tip top or not. So, so you see how price is going, right? The same way we were talking about earlier. Look, come down, comes up, come down, and then comes up, right? As long as it doesn't break below above this, we're good. We're still continuing trend. Look, and then it breaks down. You see? So, so your stop loss, in ideally, what you want is once it passes this, your mental stop loss is above this level, 335. So if price does close above here on the 5 minute, then you exit. If price stays below, you stay in the trade. Now, once price closes below here, now this is now your new mental stop loss. Your mental stop loss will be close above up here. And each time what you do is you got to move your stop down, right? Once it breaks this level, your stop is now above this level, like that. You just kind of move it down as it goes. That's how you trail it. But you got to keep your that bracket a little distance so your trade can breathe. Because you see these wicks, they like to wake up. So if you don't give it enough space, it's just gonna take you for free. You're just gonna give back money for no reason. It's gonna take you out and then come back down into your direction. So you want to give it some space to let it breathe. What I like to do is I like to put the stop loss usually like above the see as it's moving down here, I'll put my stop loss like above that 5 minute candle, above that 5 minute candle. Like but above your level, obviously, right? So that's what you want to do. You want to just keep your stop loss here, but your mental stop loss like above whatever resistance that you're watching. Whatever the resistance or support that it just broke, that is now the price cannot close opposite on the other end on the 5 minute. And that's how you would trail. So that's how I kept holding, right? Until we got down to here. This area here, we could tell that it was already slowing down, right? Then look, it started to slow down a whole bunch of just sideways, right? Once we got down here, you know, right here, look what happens. We got down, right? Volume's still going, but once we got down here, look at this. Green candle comes up, giant volume comes up. The most highest volume of the whole time, you see? That's all buyers right there. Stepped in. Buyer stepped in, and after that, we kind of went sideways for a little bit. See, we went sideways for a little bit. Up, down, up, down, up, down. So look at the volume though. You see, the volume became now all at the average, all drop. And see, now this is just consolidation volume. And then we finally get a break above, right? But look, you can see the pivot starting. This is how you know when the pivot's starting to happen. But because I was in shorts, I didn't want to flip to the next trade, or I didn't want to look for longs yet, because I was pretty much done for the day. So during that time, I was just trying to manage my trade. My stop loss at the time was, I believe it was at the close above 385. If it closed above 385, I would exit. And see, 385. I don't think it closed though. On the 5 minute, it never closed. You see, look how long on the 5 minute. It just stayed below. Look, the 5 minute stayed below 82 for a while, you see. Until finally one candle broke it. This candle right here somewhere. Yeah. So, but you can see here, to recognize the pivot, volume stopped for the sellers. Now buyers stepped in. First sign of buyers right here. Boom. And then after that, you look at it. It's making lower high, lower high, lower high, lower high, right? It's now not able to reclaim the lows anymore, right? The lowest. And look, it's almost similar to this top part. See how it shot up, but now it's making lower highs. You see? Lower highs is not reclaiming anymore either. It's not able to match up and get to the equal highs. Right? So down here is not able to get to the equal lows. You see? It's starting to pivot upwards. See? Higher lows, higher lows, higher lows, higher lows. Right? And So pretty much that's when we exited right around that area, or actually we exited like right around this area here, somewhere right here. When it finally actually made the move up. So somewhere right here, I exited. See, I held through this whole thing though, you know, but we finally got stopped out right here. But by that time, my stop loss at the time was right here. I think it was like right here, somewhere right here, 296. So that right there secured me 195 ticks or something. So I was guaranteed money by then already. So I was okay with the idea of letting it run, potentially going to a bigger move, or take 195 ticks. You know, that's 100% gains. It's basically 200 ticks. I have to work on placing my stop loss. I have to work on placing my stop loss. I'm always going YOLO mode. So what do you do with your trade? How do you manage it, Relentless? Like, do you move your stop, or what do you mean by YOLO? Do you move your stop to break even? What do you do? How do you manage your trade? So we can discuss that. I mean, your gains are pretty big. Relentless, your gains are pretty big. I know that. Do you go heavy on size? What is your normal sizing like? What do you do on this stuff? Let's see. Either I keep moving my stop loss around even if I'm negative, or I just don't place one at all. Okay, so guys, I urge you to use brackets. Okay, I let I thought it was a good idea sometimes because I thought I was in control of my trades and I can manually close and open it and exit, as I please. But as you can see, the example on CL today, right? Let me show you what the you guys saw the CL move, okay? Sometimes every now and then you're gonna get like a giant move like this. I'm just expanding it just so you can see, for example. This move right here can happen in a split second. So randomly news release like today on CL and it just dropped. It dropped to like a whole dollar. How are you gonna stop that with your fingers? You can't. Sometimes you look away, you look back, and you're like down, like your whole count's blown because of that move. You know. So so trust me when I tell you, it's happened to me before. I traded at night. One day, thought price was moving slow, I could handle it, and then out of nowhere, this giant candle from hell came out. It just dropped like huge, and the moment it dropped, obviously with a big drop, I was expecting it to kind of come back up a little bit, but guess what? The next one came down like this, and it never came back up. So you know what? I had to make a decision and just cut it. I just closed the trade manually. I market closed it, and I was down like instantly, like $3,000 from a drop that came out of nowhere. Yeah, so see, it's like that, a big move like this. I was like, okay, you know what? It's gonna come back up. It's gonna come back up, and it did not. It just came down to the next candle, and these candles comes out of nowhere sometimes, especially during like low volume hours. There's manipulation. You can just get a big giant spike some randomly just to wake out everything, right? So that's what happened to me, guys, and instantly I was down like $3,000 because I had no stop loss in place, right? So always have a stop loss. A stop loss should keep. That's exactly why you have a stop loss, though, is to prevent situations like that from big giant spikes that comes out of nowhere and you are not there to stop it. You're out there for the same trade if it does come back. Yeah, and you would in turn end up making more because break even is closer than you make move it. Yeah, so that's also the thing. You guys gotta accept your loss sometimes, quick. That's the best way to take the trade. Take the loss, come back in with a new trade. Way better than you sitting there hoping for price to come back and you're just sitting in drawdown, red drawdown. Your trade is red the whole time. It messes with your mentality. You rather exit that trade, relieve yourself from that stress, and then if the trade's still valid, come back into the trade. That's it. But the problem with staying in the trade, a losing trade, is that it messes with your mentality, messes with your decision making skill. You're not trading off of hope. You're not trading off of analysis anymore. You hope it comes back up. I started playing demand and supply zones recently, and I would put a stop loss around there, tight stop with a huge profit, and that's why you see me getting yeah. So like what I was saying earlier, a good way to do a stop loss is above your candle, right? Because you see this giant, you see this reaction, right? You see this reaction. Your stop loss should be like up below that. I mean above that, or like above this area. That's where your stop loss should be. That's ideally what you want to set your stop loss at, guys. Because the thing is, if price is strong, right, and you're looking for it to go down, price should consistently look at the trend line that it's doing, right? This is what price should be doing, the correct way price moves, right? It should be moving like that. Look at it on 1 minute. See the 1 minute, it should be moving like this. This is how price should be moving. You see, anytime it comes back up, it should move down again. That's how price should be moving. You see, look, it should be moving like that, right? That's how price should be moving right there. You see, in this formation, you know. But look, let's just say we pulled it all the way down, right? It'll be somewhere right here, right? Let's say right here. See the ball. That's the trend, right? 5 minute trend right here. And guess what? Take a look. Once it broke, what happened? Once it broke that trend line, see, it broke. So a lot of times, deep down where your stop loss is, but you guys want to play off of hope. That's why, when you start hoping, that's when the trades no longer, you're not even trading anymore. You're now hoping. But you see, once it breaks this trend line, see from the top, look, it broke out. You see? So price, if it's moving in your direction and your analysis is right, this is how it should continue to move, continually going downwards. But the moment it pops up again, that's when it's starting to be iffy. Even if it comes here, it starts getting iffy now. It can do this, sure, great, but if it closes above here, this is where it's going next. You see? Once it closes above that resistance or support, it's going to the next level. Because that's the direction it's heading. Level to level. And that's why you hear level to level a lot. This is what level to level means. Once it passes this level, it's going to the next level. Once it goes below this level, it's going to the next level. Once it goes below this level, it's going to the next. And on to the next. You see? You know? It's very simple. Trading is simple, but the problem is your emotions get in the way. That's the problem. Your emotions, what defines your stop loss, and all that stuff. And your TP, how you profit take, how you execute off of FOMO. It's all emotions. It's barely even, it's barely analysis. Analysis is just one thing, but the emotion part is the crazy part. Um, but yeah, so that's how you would place your stop loss, kind of like above those level, above this level right here, But obviously, since you're right here at the top already, your stop loss should be up here. So that's why sometimes you need to know, okay, before you enter a trade, know that this is your real stop loss. Okay, any stop loss in between below here is gonna be a bad one. Okay, so sometimes people are so obsessed with having a tight stop loss, right? You guys need to let your trade breathe too. That's the problem with tight stop loss. You will get stopped out, and then your trade's gonna go in your favor because you were so obsessed with having a tight stop loss, and then being able to tell people, "Oh, I'm only 10 tick stop loss, 5 tick stop loss," all that BS. People get obsessed about that, man. Like they're all about the clout. They try to show off to their friend, "Oh, great entry, great entry." So what, man? So what? Sometimes you can't get that entry, and if you can't get that entry, don't enter. You missed the trade. Wait for the next confirmation. Wait for the next hold of the level. If the next level holds, then you trade. So let's just say, for example, right, you missed this trade right here. You missed this trade at the top entry right here, right? You now missed that trade. You don't enter like randomly anymore. Okay, you don't enter right here. This is not where you enter. This is not where you do any of that stuff. You wait until price comes down, right? Do whatever it's doing. And now, if price can hold this level, then you would take this entry right here. See, as price comes down, you take this entry. Your stop loss will be somewhere up here. That's your second entry. You're not gonna have as good RR, but that's how you're gonna enter, and then you're gonna have to accept that loss if it comes back here, because then now if it comes back up here, it's gonna go up here. You know, so just know sometimes your entry point may not be the best, but if you really want it, depending, if you're not that heavy, you can even take this trade, right? But then the thing is, if you take this trade here and your stop loss is here, what is that? 50. That's about 100 tick stop loss right here. Okay, that's 100 tick stop loss from here to here, right? But the problem is, if you take this trade and your entry is you're looking for entry down, I mean you're looking for TP around here, that doesn't matter because take a look, you're risking 100 ticks for how many ticks? 350, 270. You're about 100 ticks for about 300 ticks right here. See? So if you just TP down here and just accept your loss of 100 ticks here, that's still good. Really good trade right there, right? So that's the thing. Sometimes, you may have 100 tick stop loss. Sometimes you're gonna have 50. Great. If you have a great entry, you know, it just honestly, it's those. Some people have a defined stop loss, like 50 tick stop loss, right, or 40 tick stop loss. I don't know how they do that because that doesn't even make sense. How can you have a defined loss like that when that's not how the market is moving. There's no way you can have just a 50 tick stop loss. Because what if you need like a 55 tick stop loss or a 60 tick stop loss? 50 tick stop loss, you're giving away the market as liquidity. You're just donating at that point. Market's just gonna hit you easily because it all depends on your entry. How can you have a specific set defined tick stop loss or money? Okay, tick stop loss that doesn't make sense. Money, the amount, P&L, stop loss, that doesn't make sense either. Some people's like, my maximum loss in the trade is $200. Maximum loss in the trade is 500. How? How can that even make sense? You know? Place your stop loss based off the chart and the way the candle is moving. That's how you should do your stop loss. Sometimes the stop loss can be 40 ticks, 30 ticks, 25 ticks, 100 ticks. You know, it is what it is sometimes, you're gonna have bad feels sometimes. So your stop loss may be further out. Sometimes my entries, I don't know why I enter the market's moving too fast, and I have a horrible entry. It filled me at like a horrible price. And sometimes what happens with that is if it gives me a break even, I'll even get exit at break even because it filled me very bad. So I don't want to be in that trade because my R and my stop loss is too wide after that. So because it's too wide, I'll take my break even and just get out of that trade. Because the defined risk on that is just too much. So that's how you kind of gauge your stop loss and placement of stop loss. And then next one is yeah, so trading plan. Back to trading plan. So this was the trade that was in my trading plan, right? And a lot of times what happens when you go through the day, things start changing, things start shifting around. Like see this area here, this could potentially change my trading plan right here too, maybe thinking that resistance is around 50. You say, but I did not do that because it's not in my trading plan. This is my trading plan, 370. So 370 came, I striked, I attacked, right? So sometimes you're gonna have impulsive decision. A lot of time, what happens is you enter this trade, and let's just say it stops you out. The moment it stops you out, now you're no longer short bias. You now want to long it just because it stopped you out. Because if it stopped you out, it means you're wrong. So you reverse your own decision. A lot of time that's what happens too. So kind of recoup yourself. Think about this right here. Is it an impulsive decision or is this in your trading plan? Sometimes it stops you out, but guess what? Price shoots back down again. Your analysis is back in action. It's back in the play. So you can re-enter the trade. I do that all the time. It stops me out. I re-enter the trade. You know, don't flip your buys too quick just because you get stopped out. A lot of times, if you think about it too, right? When you're scalping, you would scalp, let's say shorts, and you would take the profit. And then the moment it shows a little sign of bounce, you enter longs because you think just because you exited out of your shorts, that obviously means that it's going to reverse, right? Something like that. Situations like that is going to make you change your decisions. So just kind of keep an eye on that. And then now you draw your Fibonacci retracement or whatever it is that you want, whatever it is that indicator. This part right here is basically just whatever indicator or confluence do you use. Whatever trader you are. I use Fibonacci, so and then or trend line. See, so I would look and see I would use basically look for another confluence in the area to confirm my trade. Now, and then you look for where's the key level support or resistance nearby. This is also important. You need to know where you're heading in your target for your profit taking, and you need to know how far it is, and you need to know how if there's anything stopping you along the way. So as you can see, this whole area here, this is my supply, this is my demand. At the time, it looks like this. Right? At time it looks like this. You don't see the candles on the side. And then, so what do you see? Right? Where is the next support? Next support is right here, 350, 335, and 320. So that's the reason why 335 is where I trimmed a good amount. I trimmed right here. Right? And guess what it does? It starts dropping right there. And then that's when I held. Because look at the volume, right? You got a big amount of volume right there. The volume came through, and there we go. We bottomed out right here, right? And then there we go. We start bottoming out. So I trimmed most of my position already. By then, I only have one here. And then stop loss, my hard stop was here. And then I just hold my position. And then there you go. And then the trade eventually reversed. So so just always know where you're heading and where your resistance is. So these levels you see here, supply and demand, this is my main watch. These levels right here that I draw inside of these levels, they're just there to know that it's just levels to keep an eye on in case it reverses, bounces, reaction levels. You know. Um, and then now find your TP level, stop loss is RR at least 1 to 2. So We kind of went through that already. Stop loss, TP levels, and then just always think about your RR. Okay, so just know that, like, look, if you're trying to take this trade to this trade, you need to know where your stop loss is. Is it worth the trade? Is this trade even worth taking? If it's just like 1 to 1, then sometimes I do take 1 to 1, but that's scalping. Rarely though. I rarely take those, and they're very fast paced. But yeah, I take at least 1 to 2 because like you saw today. Today was actually a perfect example. I broke even my first trade. I think my second trade I added, but it instantly stopped me out because of my brackets, and it gave me some like loss on two of my contracts, but break even two of my contracts. So I was down like $1,000 uh going into the day, and then my third trade was this trade right here, and this all took boom boom boom, look at that boom, and then there you go. I was up $2,000 after that. See, so from losing 1,000 up to 2,000, up positive 2,000 on the day, that's a $3,000 flip. You know, good RR prevails, right? See, so basically, what 1 to 2 trades, I'll break even at a loss, and then one trade is all it took for me to, bring it into the positive, and that's it. That was my last trade. Hope trader. Yep, hope is the last thing to die. Next one is, did it break trend line? So this is what another thing is just looking for confluences. So this is what I mean, okay? So a lot of trend line traders, one thing I want to point out, I already pointed out in my other videos, but one of the things I want to point out, right, is is when you're trend line trader, a lot of new traders will use this style, where trend lines and patterns, head and shoulders and stuff like that, which is fine, but you need to know how to use it correctly. Okay? Okay, take a look at this, right? Take a look at this trend line going down, right? Trend, if it keeps on continuing down, it means it's still going down, right? But trend line, you gotta find where the support and resistance is, right? It looks like about right around this area, right? So you draw a line right there. Actually, let me draw a better line. I would draw a line like right here, right? So cross. So now, if you're gonna base it off of the trend line, price needs to break above that trend line, right? It needs above that trend line, but it also needs to break and hold above this resistance or support. So you need to add a confluence to your trend line strategy. Trend line plus a level. So this is a level 295 at the time that was holding below. So it needs to break this trend line plus 295. 295 would be where price needs to hold above and close above. If it's just wicking, it does not count. But if it holds above, then look at the 1 minute. You see, if it holds above, you are now confirmed that it's a trend line break. So always mix your trend line strategy with a level. I use the trend line just to kind of visually give me an idea of where the trend's going, how it's reacting, things like that. Okay, I don't enter just because if it just broke the trend line, I don't enter right like that. That's not how I enter. I wait for it to close, or I wait for it to come back down, retest that level that I was talking about. See, and then come up, and then as it's pushing up, then I would enter longs right there. As it's pushing up, I don't ever enter as it's coming down, unless I see volume. So here's another thing that I guess I want to add here. When price is coming to into a wall, right, of some sort. Let's say when price is coming down to this wall, right? A good way to see if price is stopping there and if it's not pushing down is like this right here. If you see a dip in the volume as price is pushing down, that's a good indicator that it's not going to push through. So that's when you would enter right at that line. Sometimes I do that because of the volume. If price is coming down here and then suddenly you see a dip in volume, like a little low one, right now it doesn't have it, but you know, uh, let's see if I can find an example here. Yeah, so this would be an example over here. This is an example over here. Earlier I was talking about. So you see how price is coming down to a level, right? With the hammers going down is red, sellers in control of this candle. See? But take a look. The volume suddenly just had a dip. I would enter longs, like right there, you know, or I would either enter longs right there and then I'll hold it and then it would go up. So that's another way to enter. That's how you execute a trade also. Look at the volume. If the volume is weak going into that direction, it's most likely going to reverse the next candle. The next candle will basically pull back or push up, depending on whatever candle you're looking at. But usually when there's a dip, that's when price doesn't is not going to continue to that direction that it's heading. Especially when there's like high volume and then suddenly there's a volume dip. That's a big telltale sign of a reversal incoming on the next candle. Next one, did it break structure or BOS, break of structure? So break of structure. Look, this one right here is kind of dip right here too. Right here, see, price going up. Look, price going up, right? Price going up, and then suddenly volume dip. See, volume dip. Look, and then reverse. See, and as it's reversing, volume's coming up, right? Volume's coming up. And then when it comes to this candle, look, volume got increased to a big one, and then after that, shot up. Volume shot up. Yeah. So I watch volume a lot. I'm just a volume trader. Keep an eye on volume all the time. Um, what they say is you can manipulate price, but it's hard to manipulate volume, right? So sometimes you'll get like these giant candles, right? There's gonna be these big candles, right? And then the problem with these big candles is there's no volume behind it. That's how you know it's a fake. It's a fake price manipulation. Oh guys, my CL trade is going right now. Going really nicely actually. Which CL shorts that I called out. I don't know if anyone took it. Did any of you guys take it? In the premium chat? Nobody? Ah, shame. Called it out. You guys even had a better entry than me too at one point. Um, at 20, yeah, that was a fair value gap. Yeah, I removed most of my position though. Sadly, I was in pretty good amount. I would have been up good right now. Yeah, but yeah, I just removed it because I was doing the course here. I didn't want to lose focus on the trade or keep looking at it. Yeah. Um. But yeah, look, guys, this is a break of structure and trend line trade that I took on the CL. See how the trend line is coming up, trend line going down, continue the trend line going down in the picture I sent you. Um, that's one of the trade right there that we just spoke about. And I watched volume too. Volume was not making sense for any move going up, and so I took the trade. I took the shorts. And then I was also saying if it rejects the 74.40, then yeah, I like the shorts. So let's flip to the this screen now. Let's see here. Yeah, so I think this is the screen. Yeah. Yeah, so let's talk about break of structure. Let's see here. This is MQCL. Right? So as you can see here, look at the price. Look what it's doing. Right? Let's talk about more about this area here. Um, as you can see, I drew a trend line right here from the bottom, up, 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 right? Hit three times. That's now a pattern. You see, now it's continuing, right? And then we're also making a lower high at the time here. Um, so I was kind of watching this area here. If it keeps rejecting this area, then that means it's weakness going upside. And then with this pop right here, take a look, right? Take a look at this. Let me see here. Let me show you a good example of the 5 minute here. Zoom out. So as you can see here, price is going up with volume, right? Price is going up. And then look at look at this red candle. Boom. Even the biggest volume of all, right? Engulf the whole thing. And then after that, I did not enter shorts just yet. But by that time, I was thinking right there already, there's weakness because obviously rejected. And then this area here, this next candle here, you can see volume is now low. You see, big candle, big green candle, but volume is low. See, so now I know that buyers are not interested in pushing it up anymore. See, it was interested here. See, volume was coming up, and suddenly they lost interest. So that's now showing weakness, right? Look, now volume is dead, completely dead, completely dead. And then I entered somewhere around right around this area here. I entered on this rejection candle. This is where I entered, right around this area. So once price showed some rejection there, I entered. And yeah, see, the next one did push up, consolidate, but it was never able to continue higher. You see, price never continued higher, right? And then finally, when it did break structure, right around this area, I added more right around this area as price was pushing down, pushing down. You see, pushing down. See, price pushing down. I added, and then finally we got the drop while we were doing the course right now. Got the drop, and look, I'm still holding. And guess what I did? I move my stop loss to break even. You see, I don't risk anything on this trade now. This trade is a free trade to me. I don't even care about it at this point. I just leave it. If price works, it works. If this trade works, great. If it doesn't, then I will break even. One moment. Yeah. So see, so sometimes, a lot of times, what happens is we have to accept the trade sometime, right? This is the trade I took. Now my stop loss is at break even. I risk nothing on this trade. So if this trade works out, I will make, let's see, 300, and then I think my next TP all the way down there. Look at that. I'll make 300, and then I'll make $1,200 on this trade if it drops all the way down to my final target down here. What do I risk? Nothing at this point, right? I risk literally nothing. I mean, if you think about it, you're gonna you won't take your TP. I mean, you won't take your profit, but the goal is to get down here. This we are risking nothing to make this much. So sometimes you just have to accept that the trade may not work out all the time, and you may come out to break even. But the way I do it is, look, I'm not gonna take it here. This makes no sense. I'm not in it for this. This is not the money I want to make. You know, my trade it needs to go at least down to my first target, right? Once it hits my first target, then I will move my stop loss down a little bit to my maybe down here. I almost clicked it on accident. But yeah, so once I TP here, my stop loss will probably be around here now. You see, every time it moves past a certain level of support or resistance, then you move it down. You move it down to the next level. You move it down to the next level because price moves level to level. So once price is at a certain level, it's gonna go to the next level. So you move your thing down to the next level. You always keep it one level behind it, and then your mental stop loss can be, how whatever you set it. But um, but your stop loss should always be one level, away from it, just to kind of keep you trailing in profit, right? Or the other way is, so that's the thing. That's the thing, right? Right now, see my trade is in profit. I'm not gonna take it because the thing is, it needs to at least hit my one TP. It needs to at least hit my first level of TP in order for this trade to even be an analysis, right? I had an analysis for it to go down. It needs to hit at least one TP, or else I'm wrong and I'm break even. So, um, so you see right here, this is a trend line, right? This is what I was talking about. It needs to break this trend line. After it needs to break this trend line, where does it need to break? It needs to break about this level right here, around 74.20. Right, 74.20 did break it. There you go, it broke it. See, that's confirmed trade right there. And then now look, fair value gap is here. Fair value gap now becomes the resistance. You see, fair value gap come down. Now this is the resistance. See, now it's just bouncing back and forth. This fair value gap right here is an indicator also. So if you guys want to use it, we do have it in the workstation. Let me link here. If you guys are using the trader, let me give you guys the link here. Uh, I think it's right here, workstation, Ninja Trader script, copy link. So if you guys, um, yeah, so if you guys use Ninja Trader, it's in there. ICT fair value gap, that's the indicator. It's pretty good. I use it. I used to, I don't know, I kind of go off and on it. But the way I use it now is just for like a bounce back and a retracement. See, retrace, you would enter here. Now, your stop loss would be like up here, or wherever the structure is. Yeah. So that's how you would use the fair value gap once it's formed. The thing is, I know how to draw fair value gap myself already, so I can kind of see it without it being there with my own eyes. I don't need to draw it to see it. I can imagine it here, see, when it's formed. But you know, just I don't know. It's there, so I don't miss it sometimes. Um, yeah. So see, fair value gap. This one's formed here. Now this is used as support, but this is what I plan on doing all the way down. So this is the first level, right? Once we break this level, then we're going down to the next level. And that's why my final target down there. I might even TP around here, depending on what it does here, but this is my final target down here. And then down around this area is where I want to look for longs. Yeah. So that's the trade idea. That's pretty much it, guys. Hopefully that was detailed enough. I do have this on recording, so I'll have it on YouTube if you guys ever want to come back to it. But for the most part, that's pretty much everything. Just have that checklist, execution checklist up when you're trading, and hopefully that can remind you of what to look for. Go down that checklist. If all those things are there for you, go ahead and execute. If you do take a loss, then it's okay. You followed the plan, and if it didn't work out, so be it. Like this trade, I don't know, it might not work out. It might come back and do something crazy. Who knows? But I'm okay with that. See? But look, as this trade's going down, the trend line is going down. This trade should reverse somewhere around right here, if even if it comes up, and then something like that. See? So, we know that it has a potential to go up, and I have to allow that space for it to go up. But I have no risk on this trade, so I'm okay. But yeah, so that pretty much concludes everything. You guys have any questions? Ask away. We have NFP tomorrow, guys. We have big news tomorrow. So be careful going into the news. We have Exxon and just a lot of oil news also before the market opens. One before the market opened and one right after the market opened. So the market's gonna move crazy tomorrow. We have NFP opening and then we have oil news. Price is probably gonna be everywhere tomorrow. We don't know. So just be careful trading tomorrow. Size down. It's Friday also. A lot of people lose on Fridays just because volume is a little different on Fridays. People end day early on Fridays, so things just they're not normal. So a lot of people lose on Mondays or Friday usually, beginning of the week and end of the week. So usually on Mondays and Friday, I tend to scalp and base it more because you just try to secure your profit and end the day. That's how you want it. This is very helpful. Thank you for holding those trading sessions. Of course. So if you guys have any questions, feel free to ask. Trading floor, the team, staff, everyone there, very helpful. We answer fairly quickly, I would say. I'm always on the phone usually, so you know, I try to answer as quick as possible. Thank you. Yeah, glad you guys can get some value from this. And yeah, so I'll have it up on YouTube, and you guys can always come back to it and watch it, fast forward it, whatever you guys need. All right, guys. So like I said, I am in this trade. You guys can always look into this area here. Oh, why did I pick Dick? Because that's my name, man. I don't know. Yeah, man. It just happens to be my nickname, and it never went away. So this is what it became. I embraced it. I embraced what I grew up with. But yeah, guys, always keep an eye on that room. Dick's Premium, George Trades, and Freedom Trades. Those channels, we're always sending out signals, and even if you guys are trading on your own, you guys should always keep an eye on those levels just so that you can see and use those levels as reference. You may have a different bias than me. You may have a short bias. I may have a long bias. Like earlier, Tank had a long bias, right? But I had a short bias. I like the longs, but it was starting to shift to the shorts. So I told him I'm hopping in shorts. Like no hard feelings. I'm playing off the charts. It's what the chart shows me, and this is what I'm doing. So there's always two scenarios to every single chart. There's always two scenarios. That's why you always see me post upside and downside levels. There will always be two levels. Two sides. So, whatever sides you have, just check those channels, and you guys will be able to see the levels, so you guys can reference it and see if it matches up with yours. If it matches up with yours, then your analysis, you're gonna be more confident in executing your trade. So, it's always good to have reference of other traders. That's the whole point of a community. So don't, I don't know. I see so many traders just kind of going crazy, making trades everywhere. So just look for quality trades. A lot of times, I'm gonna tell you right now, in a day, there's not that many trades. And the non-quality trades that you guys take has usually has bad stop losses and bad RR, and then it's like in the middle range. Middle ranges are dangerous to trade, guys. Because the thing is like this. This is considered a middle range right here. This area right here is a middle range. See, this is a middle range. You want to take entries from down here or like up here. You don't want to take anything in the middle. Because in the middle, your stop loss is wide. Price liquidity is just gonna grab you. No matter where you're at, it just randomly grabs you. You'd have to get a perfect entry in order for it to come and like go your way. Okay, my entry was based off of right around this area. Because then price can go all the way down. Tomorrow, honestly, I don't know. Like, I honestly don't know. Um, I'm just gonna have to see. But nighttime, I trade CL usually. I'll trade with the team here. Um, and then the mornings, honestly, I've been trying to shift to CL crude oil, but yesterday I traded NQ because it was at a level, and also NQ was also at a level today, right? So that's why I took the trade today also on NQ. Otherwise, I want to trade crude oil more, but depending on whatever the setup is near, whatever setup is incoming, then I will take that trade. I will choose that ticker. Do you have a video where you go over how you draw your support and resistance levels? Yes, I do. In YouTube. In YouTube, there's I have a confluence. Just type of confluence, and you'll see it somewhere. Let me just take a look here, real quick here for you guys. But yeah, we're pretty much done with this thing here. But let me give you guys the link. Alrighty, we are good then. So see you guys tomorrow. We'll be trading tomorrow, same time every day. All right, team. Let's get it. Take it easy tomorrow, though, okay? A lot of news. Check the weekly news channel right here. This is the channel you always need to check out, okay? Always check out that channel before you trade. Anything in red, do not trade during that time. All right, team. Talk to you on the trading floor.